Hey traders, checking into the stock market today, finally seeing daily consolidation underway. Now we're going to gauge, is it a bull flag or is this the start of weekly consolidation? Apple bulls putting on a show still, and I'll go over my worst swing trade of the year and how I screwed it up. So here we go with the S&P 500 futures chart. We had the open this morning and a lot of pre-market weakness, just a straight up stair-step drop, little morning bounce first thing, resulted in a lower low. We then had a big bounce off of that low. And then the bullish reaction to the FOMC minutes marked by that volume. We could see a little 5-minute higher low and higher high. And then we ended the day with some hourly consolidation shaping up. So the big question from here, and we can see the S&P 500 futures, the hourly RSI got just down to 30, just above it. And the NASDAQ hourly RSI did get oversold. So these are first hourly oversold conditions after a significant bull run on the daily time frame. This is what we refer to as a back burner trade. And if you Google TheChartGuys back burner, there's a video specific all about it. But this is going to help us determine, is this a daily bull flag or not? Because the strongest uptrends have first hourly oversold conditions mark your daily higher lows. So if into the end of the week here, if the bulls are able to confirm an hourly uptrend, the daily higher low will be set from hourly oversold, and we'll be looking right back up at the recent high. And that will be a daily bull flag shaping up. If we fail the hourly trend change, however that takes shape, if we just drop straight down tomorrow, or if we set a higher low, fail resistance, and then roll over, if we break the low of today, hourly oversold did not mark the daily higher lows, and that would be a little check mark for the bears. We're still going to be scouting a daily higher low, even if we do continue consolidating. Just looking at SPY, I guess we'll stay consistent. S&P 500 futures. I mean, the daily EMA 12 is not even close to being tested right now. So even if this isn't the daily higher low, we could still drop back and form a daily higher low. But again, at that point, you start to shift a little bit in terms of, is the pullback big enough to then set a lower high and lower low and lose the daily uptrend? If your first hourly oversold marks your daily higher low, you're not going to lose that daily uptrend. So that's what we're keeping an eye on, and that low of today for both SPY and QQQ is now key for me in the short term, because that's either going to have me check mark, yep, bulls in complete control, bull flag, or no, that didn't mark our higher low, bears getting a little bit of follow through on this daily consolidation. And NASDAQ, very similar. Hourly bounce. Looking for an hourly higher low on this pullback. Can we confirm an hourly trend change back to the bulls? Again, Apple, somebody is buying a lot of Apple. And it is very rare to see Apple up 1% plus and then to have Amazon, Google, Netflix, Meta all down 2% plus. Just doing completely opposite things. And you can see the daily stair-step pattern is still intact. Bears are hoping it's a volume climax, but we're just looking for an hourly higher low next consolidation. We're going to be watching first 5-minute oversold conditions. Again, same concept. If Apple's first 5-minute oversold conditions mark our hourly higher low, the bulls keep absolute complete control. So we'll keep an eye on 5-minute oversold next time Apple sees it, potentially tomorrow. But again, the relative strength has just been screaming. And if you look at Apple divided by QQQ, it's just exploding today. And that's a cup and handle as far as relative strength is concerned. So we could say that Apple is the strongest it has ever been relative to the NASDAQ in the history of the stock market, which is very notable. Again, I keep highlighting how, for me, this is the most important stock that there is. And it is now the strongest it's ever been comparative to QQQ. So if that's going to change, treat it just like a daily uptrend. This Apple divided by QQQ chart will have to lose daily EMA 12, which obviously isn't even close to happening at the moment. We just grinded up and then broke out. So somebody's buying a lot of Apple. We know Buffett bought it in Q2. Maybe he's buying more. Maybe Apple's buying back shares. I'm not sure when the quiet dark period is or what, but without the only way that today happens, a day like today, where you completely disregard what the broader market is doing is when there is significant volume to offset all the bots and the algos that are trading based off correlation with the broader market. So someone's buying. And tons of space for an Apple daily high or low. And we got less than 4% away from an all-time high today. And so again, as I've mentioned, the biggest argument point for bulls that a bottom is in, for me, is this Apple move. 3.5% from the high of today, from all-time highs. Congrats, Apple bulls. Buffett's certainly happy. Semiconductors pulling back on the daily. So anything above 226.73 is a daily high or low. We're watching the hourly downtrend now as our guide. So yesterday we broke the hourly uptrend, lower high, and then today the lower low. So we lost the hourly uptrend, then we confirmed the hourly downtrend. And so on this current bounce, we're just looking for another hourly lower high. Can the bulls shape up an hourly trend change to set the daily high or low is the question we have into tomorrow. And so again, it's the lows of today are key for bulls tomorrow, because if lows of today break, it's back to square one for trying to change the hourly trend. If you hold the low of today, all right, you can try and change that hourly trend. But as soon as you lose it, you got to start from square one again. And you know, we're just looking for the hourly lower high next bounce. It's like starting from scratch as opposed to already having a trend change partially developed. In NVDA, the more convincing rejection off of its resistance. And so was watching for the potential of it to be a cup and handle like pattern, but at this point, the retracement size is, well, no, it's still possible, but that would need to be the daily high or low. Retracement size of about 40%. Same deal, have to shape up an hourly trend change for a daily high or low to be set. Healthcare, inside bar bear break, daily MA12 support. Anything above 131.65 is a daily high or low. And I am still in a swing position here. Pretty uneventful at the moment from my buy on, what was that, Monday? And I will exit if the daily uptrend is lost. And then we'll zoom out and we'll watch for a weekly high or low to try and form. But daily uptrend will be my guide there. The financial sector also is continuing to put on a show. Today was just pretty much an inside bar. And it was another example where this has happened twice now. I forget when the first day was, whether it was Monday. QQQ will tell me. It might have been yesterday. All the days are melding together. Yeah, I think it was yesterday. But where QQQ shows us weakness and the financial sector held up for the bulls. So that happened more notably yesterday, but it did happen again today. QQQ started the day with a clear high, low, failed the high of the day and broke the low of the day. All right, bears have short-term control. And we then had a 5-minute downtrend for another hour after that. While that was taking place, XLF double bottoms at the low of yesterday. First thing, we hold it by 1 penny, or we lose it by 1 penny. And then all morning we hold on for the bulls. And then right here, it looked like, are we about to see all major sectors at the low of the day again? And if QQQ had broken, nope, if XLF had broken 35.38, we would have had all major sectors at the low of the day, and it would have been a much different tone on the day. But we double bottomed, and bulls defended that support very significantly. Had a red trade today, trying to short. I was looking for a 5-minute lower high to be the result of this bounce, and then hoping for that bear break. Because if we took out that triple bottom of support, I would anticipate some solid follow through, because that would be the start of convincing daily consolidation, which is certainly due here as well. And so for me, I just like the risk and reward there. But my mistake here was saying, oh, I'll exit. You know, I made an initial entry and then I made a second entry and said I'll exit when the bulls gain the 5-minute trend. But it was a much bigger bounce before we started 5-minute consolidation. And so at that point, I just had to say, well, I'm just going off the high of the day. And so that made the risk more than I wanted for that trade. And so my anticipation that the result of the bounce would just be a 5-minute lower high was too much assuming. And I did exit half at a loss to limit that risk and then stopped out the other half on the FOMC minutes reaction. So that was my worst day trade of today. We'll talk about my worst swing trade of the year. So XLV, we already did it. IWM, daily consolidation underway, losing the stair-step pattern. Did we see hourly oversold conditions? Yes, and a very significant hourly oversold bounce. So again, back burner playing out. 1.5% bounce, leverage ETFs going 4% plus. So the question is, does hourly oversold mark the daily high or low? The bulls would have to confirm the hourly trend change tomorrow for that to be the case. If they do, bulls in complete control and a daily bull flag. If they don't, we're going to test daily EMA 12. We haven't even touched daily. That's astounding. We haven't touched daily EMA 12 in a month. That just shows you the strength of the trend. Biotech sector rolling over a bit today. Relative weakness the last 2 days. Look at XBI divided by SPY. And you can see that notable relative weakness and close at the low of the day. Last time this happened, it didn't last long. I was trading the biotech sector bearish here, and that's when it formed, it confirmed a daily downtrend with zero follow through straight into the weekly bull flag on volume. But we had the 4-hour tightening range break bear. 90.14 support broke, and 89.14, we'll call that a double bottom because we only broke it by a couple pennies. But weekly consolidation is on the verge of shaping up. And will then, anything above 78.72 will be a weekly high or low. But again, let's not lose sight. Remember, I was talking about the energy sector and oil looking for monthly consolidation and growth names looking for monthly bounces. And I was a bit early. I think I was talking about that back in May. It didn't really get going until June, but I'm watching for XLE to give us a monthly high or low, which it's on the verge of doing. I'm watching for oil to try and give us a monthly high or low, which it is much further from doing. Still trying, but I'm watching, does the inverse relationship between energy and growth continue, where monthly high or lows on energy names result, or I should say coincide, with monthly lower highs on our growth names. XBI being one of them, maybe PLTR is setting a monthly lower high, SNOW. So it's still early, but it's a possibility and it's something I'm watching for. But at this point, we would have to lose the weekly higher lows on XBI to have any confidence that a monthly lower high is shaping up. But we now have space for a daily lower high to be the result of the next bounce here. We can bounce over 5%. Hourly oversold also led to a solid bounce. Came real close yesterday. Got there today. But we are in a clear hourly downtrend. And again, as long as XBI is showing relative weakness, I favor it as a bear. And so just an example of relative strength and relative weakness. An example today being Canadian cannabis names. So CGC breaking out on the morning. And we could see relative strength on CGC when I was live streaming right here on the 2-minute time frame. I was watching QQQ and I noted, CGC, solid bounce. 2-minute higher low. 374 support. Held as a double bottom. And then a 2-minute equilibrium broke bull. That bull break was at 9:54 at that point in time. What was QQQ doing? It had a bull break as well, but it then rejected from the high of the day and rolled over to a new low of the day. So the red flags for QQQ were at 10:08 to 10:14, and at that point in time, CGC was exploding to the upside. So CGC continues its daily breakout as a laggard growth name, squeezing some shorts, but relative strength, relative weakness. So I could see QQQ, I could see CGC was up 10% plus, and I look at TLRY and I see CGC breaking its high of yesterday. So that level of 396 broke at 10:08 TLRY. High of the day, high of yesterday was 448. What did I just say? 10:08. So at 10:08, we are still 1.5% under. When CGC broke its high of yesterday, TLRY was still 2% away. So when I can clearly identify a lead bull and a lead bear, noting, of course, that those correlations do shift and we have to stay on top of them, but I take the lead bull bullish and the lead bear bearish. So if I'm looking for CGC, or if I'm looking for a top, knowing, okay, we're real extended here, 15-minute consolidation is due, or even just 5-minute consolidation is due, I'm choosing TLRY because TLRY has the resistance from yesterday, which we did break, but we broke it with zero follow-through, straight into a pullback. And in my opinion, the way I'm watching these two names trade, I think a lot of other people are doing what I'm doing, which is favoring one over the other. So if I'm long CGC and I want to let it run for a daily breakout and try a swing trade, but I know that it's going to pull back 5% during 15-minute or hourly consolidation, I don't want to sit through the inevitable 5% consolidation that I know is coming. So I can hedge it by shorting the weaker name. So if I want to let CGC run, maybe I short TLRY up around its high of yesterday. So let's say we then start pulling back, and I did short TLRY up at that high. Did not hold it as long as I should have. That was a mistake. But TLRY, 15-minute pullback. So we know we're just looking for a 15-minute high or low. Look at the bounces and the differences. So TLRY, 2.5% bounce. What was the bounce retracement from the high of the day to the low of consolidation? Less than 50%. Okay. CGC, the 15-minute pullback was much less significant. And the percentage bounce was similar. It was more, but not by a ton. But just look at the amount of retracement here from the morning move. From the entire pullback, we pulled back maybe 55% at most. And you can see TLRY gave back the entire move. And so you can see consistently throughout the day, just weaker, weaker, weaker. So if I'm looking bearish for a 15-minute lower high, I'm scouting TLRY. If I'm looking bullish for a 15-minute higher low or a 5-minute oversold bounce, I'm looking CGC. So we know what most likely scenarios are. We know a 15-minute higher low is most likely scenario. I focus on the stronger name. And even here, look at this 15-minute bounce. Anything under 439 is a lower high. On TLRY, we didn't even get within 2%. And CGC went all the way up and pretty much touched its resistance. So long story short, correlations can help with which names to focus on in which directions. And now with this weak close, TLRY bulls need to be cautious of a rising wedge. And if you've chosen TLRY as your bull play for this sector over the last few days, you can't really beat up on yourself because it didn't really present itself on Monday. Monday it was clear. But before Monday it was not clear who the lead bull and weaker name were. But Monday CGC definitely put an exclamation point on that. But TLRY is a rising wedge, and if it breaks bear, then weekly consolidation will be shaping up. And you can see that, again, we're close to the low of Monday. How far away is CGC to the low of Monday? Not even in the picture, 20%. CGC is just going to be looking for an hourly higher low, and the hourly uptrend will be our guide. So that went a little bit more in depth than I wanted it to, but you get the idea. And again, same thing with tech. Netflix has shown relative weakness the last 2 days. It started yesterday pre-market. Yesterday pre-market, we were the only name that was shaping up for a gap down open out of the big tech names on my screen. And so if we just look at our comparison charts, Netflix divided by QQQ has been pulling back for 2 days, and today was the third day, trying to bounce, but still lower than yesterday. And again, Apple, obviously, it's been much more beneficial to short the weaker names than the strongest name. And the analogy that I give is you don't go up to the biggest kid on the playground and pick a fight. So it's lucrative if you catch the lead bull short when the correlation shifts, but that's an extra layer of tricky. My dumb trade. So I had plenty of trades where I have a poor entry or a poor exit. Today, TLRY short was a poor exit, but rarely will I have a poor entry and a poor exit. And CGC was that for me, or CCJ. And this wasn't a big dollar loss. You know, the loss that I took on this trade short was like a half-day loser. So it wasn't a dollar loss. It was just, what are you doing, Dan? My entry was Monday towards the open, right after the open, which was having me focus on the daily chart and saying, all right, the broader market is showing initial signs of weakness. We might be looking for the daily consolidation, and CCJ is positioned well to roll over into weekly consolidation if the broader market consolidates. So that's my premise, daily chart. I wasn't looking at the hourly close enough because hourly was first oversold conditions. So I shorted, and we dropped a bit from where I shorted, but then the hourly oversold bounce played out. So I was underwater fairly quickly. All right, well, that was a bad entry, but I'm basing this on the daily chart. And then today I just completely ditched that plan as far as going off of daily lower high resistance of 2613. And honestly, it's because I have too many open positions with swing trading. I'm struggling to swing trade while day trading. I think if I'm going to be a successful swing trader, I've got to be off the computer because I'm looking at too many short-term time frames. So I see CJ this morning showing clear relative strength. Again, we saw what QQQ did on the morning, and there was weakness on the morning. CCJ just ripped on big bull volume and kept the hourly uptrend going. And so for me, I'm saying, oh, well, that's just another hourly higher high. And I watched the initial, bull spike to 25.80 and said, all right, well, if that level breaks, I'm just going to stop out. And honestly, it was a relief. Just get me out of this trade. I had a bad entry, and I don't want to watch it anymore. I don't want to have to, divert my attention to keep checking in on it, which again goes back to being on the computer too much for swing trading, when you should just set the levels and leave the computer if you are swing trading. And then the daily chart is shaping up not exactly, the bounce was a little bit bigger, but daily head and shoulders is confirming. And I even said in the video yesterday, I need broader market to consolidate to help this short, which it did today, which it did. And so just completely blowing it. So take the half-day loser when I would be in the green right now otherwise. So 24.40 is a double bottom. If that breaks, I would consider that the neckline breaking. Bears then need to break 24.31 to follow through with it. And then we'll zoom back out to the weekly, and we'll watch for a weekly high or low, anything above 20.34. But again, just looking at the mirror, like, what are you doing? Who are you? The VIX, keep it simple. Daily lower highs still forming. It'll be daily bull flags for the broader market if we keep setting daily lower highs in the VIX. The dollar, trying to confirm a 12-hour bull flag, currently unable to do so. Need to confirm it for a convincing weekly high or low to be set. And then we'll look back to the recent high. Metals are still very weak. Weekly consolidation is underway. We knew this was inevitable. The only thing we don't know, do we confirm further downtrends, or do we change the weekly trend? What the bulls need to see, seeing the very clear, distinct inverse relationship with the dollar, is we have to see the dollar fail the high and break that low and lose weekly EMA 12 for the first time pretty much of the year. That's the only way the metals are going to show longer term strength, in my opinion. So if the dollar heads to higher highs, of course, that's not going to happen. So the dollar must roll over for the weekly trend change to shape up. We can also watch our retracement size here, knowing that if we retrace over 50%, it's a red flag. We're at 382 right now. So swing trading bulls for the metals are going to be looking for entries on this consolidation using the recent lows as a stop. Silver, same deal. Very similar. Weekly lower high set. Can we shape up the trend change? Or do we just continue a prolonged downtrend? And the miners finally rolled over in a big way, and that was because both the markets and the metals were going down at the same time, which has not happened in a while. That's why the miners held on the past couple of days. Broader market's still grinding up, but now daily consolidation in the broader market, plus metals weakness, big red day, big bear volume. And the retracement size here is already approaching 50%. Much more likely to be a bear flag on the miners than in the metals, in my opinion. Oil still grinding? Hey. I don't know where that went. But still grinding that, falling wedge support. I need a green day tomorrow for me to keep paying attention to it. Nah, it doesn't have to be tomorrow, but just can't see any bear follow through. Again, I'm not interested long. The only people playing off the current lows are real aggressive bulls. Nothing wrong with that if that's your jam, but not me. Needed to continue tightening up. Natural gas daily bull flag confirmed yesterday. Weekly bull flag confirmed today. Double top breaking. No follow through, but we were also extended. The 4-hour RSI was over 80. So it's up to the bulls to set a 4-hour higher low here sooner rather than later. Because if we break that resistance and then pull back notably and then confirm a 4-hour downtrend, that's definitely a red flag for the lack of follow through. Lots of talking. Done for now. Do good things. Thanks for watching.
Hello, I'm the guy with the microphone, Charting Man Dan. In this section we're going to be talking about emotional and physical well-being of stock traders. It's not just about knowing when to buy and sell if we want to be... Hello, I'm the guy with the microphone, Charting Man Dan. In this section we're going to be talking about the physical and emotional well-being of a trader. It's not just about knowing when to buy and sell if we want to be doing this long-term for decades. I'm going to be showing you a little bit around the farm and how I stay balanced. Nancy, don't eat that. Hey! Don't eat that.